Next up is our DeFi forum, CBDC versus DeFi. Let's welcome our guests. We're welcoming Pradeep Singh, the head of Fintech and DeFi at Capgemini. Also joining us today is Rupert, Vice President, UK Financial Institutions Digital Asset Lead at Marsh & And we're also joined by Odelia Torteman, the Global Digital Transformation and Fintech Specialist, IFC, at the World Bank Group. So thank you so much, all of you, for joining us today. There were quite a few titles to get through there, but I just about managed it. How are you all? Are you well?
Very well, very well.
Excellent. Great to see you all. Thank you so much for joining us. With all these questions, whoever feels best placed to take them, absolutely jump in and we'll run with it from there. But first of all, let's look at the biggest opportunities for CBDCs. Where do you see them?
Well, I'll go first. I'll take it. Well, first of all, these are very interesting times where we are building, creating, securing, and we are leaving the bad behind. That's very important for us. I think we are laying the foundation right now for DLTs and CBDCs. Before I talk about the importance and opportunities of CBDC, let's differentiate between CBDC and crypto and say, what is CBDC? So if you hold some money, digital money in a wallet, or you're holding some digital money on a website, there is an equivalent deposit at a central bank, right? Which means you are governed, you are centralized. Although it is on DLTs, this is distributed on a distributed ledger, but this is governed, right? There are rules of operation. So CBDCs are a little different than cryptocurrencies, and now I could list many use cases, okay? But the foundational core values of blockchain is to figure out a way for a smarter, cheaper, better financial system, right? How could you make cross-border payments cheaper? How could you make it faster? That's the core problem statement that not only blockchain, but CBDCs are solving for. In my mind, the biggest use case is cross-border remittances. And wholesale CBDCs, right? There are opportunities in commercial banking, distribution of payments, various use cases, and immense opportunity for CBDC to come in and play a big role in future of money.
Okay, we'll open it up to the rest of the panel. The biggest opportunities for you two.
Sure.
So I think.
Go ahead.
So I think the largest opportunity is a peer-to-peer payment system or peer-to-business. Cryptocurrency's done an incredible job in enabling instant settlement without the need to have lots of intermediaries, which makes it more efficient and reduces the counterparty risk. But there are a few issues with it, some of which are obviously the volatility and potentially the lack of trust and the ability for Joe Public to still use it confidently. CBDCs being government-backed can come in and really fill that void, while still picking up on all of the advantages previously mentioned about what cryptocurrencies can deliver. So in terms of a use case, I think peer-to-peer payments will do really nicely. I think that's what most of the central banks will be targeting originally.
And maybe just to add to that, I think that if we take a step back, right, and look at the bigger picture, so CBDC basically emerged, I think, on the landscape of three main trends. First, we see a lot of developments in general within different applications for the financial service industry. And leading those, of course, is everything that has to do with digital currencies, cryptocurrencies, and so on and so forth. Second, we're seeing a lot of basically monetary authorities that are trying to address some of the challenges that we currently have within existing payment infrastructure, and there are plenty of those. And thirdly, and I think the last 2 years have demonstrated more than ever before, unfortunately, is many of the challenges that we're seeing while having a privately issued digital currencies and stablecoins. Now, all of these together have basically led to a situation where central banks, from one hand, want to offer the consumers a more digitized, innovative solution, while harnessing the amazing technology that DLT and different blockchain protocol enables, but from the other side, also do it in a regulated, structured manner, whereas we're taking the advantages of cryptocurrencies, but having them still backed by a central bank as a liability to the central bank. So I think that from that aspect, besides all the different use cases that my esteemed panelists have mentioned, I think that CBDC really opened the gate towards the adoption of digital finance in a wider spectrum, and also at a later stage towards different types of Web3 applications, because it will lay the foundation and will basically create something which is more standardized, hopefully, as we will move forward. Thank you.
Well, moving on to the security and privacy concerns, what ones do you see there being around CBDCs?
Well, big question. I wish there was an answer for security and data privacy concern. First of all, if you go back in history, since money existed, there has been security privacy concerns. There has been fraud. Going back to 2000 BC, you will find evidence of concerns with money, security, privacy, within the history too. Having said that, with DLTs, we have come a long way. So that there is a technology that can give you a mechanism, a framework where you could create secure and data privacy related framework wherein you could implement a global money system. Now, CBDCs are enabling you with cross-border payments. They are helping you solve T+1 problems. They are helping you do remittances and many such other relevant use cases, right? So wholesale CBDCs, distribution of payments, various use cases. Does this bring concerns? Absolutely, yes, right? Fraud is a big concern. Still, it's happening. You would hear every day about millions getting out of crypto wallets. So huge fraud concerns, but there are bigger concerns here when we are talking about global CBDCs and interoperability across borders. There are concerns of money laundering. Does that happen today? Yes, absolutely happens today. But with CBDCs, this could be easier and bigger. And terrorism is a big concern. Some of these concerns that is a major concern for global economies. And security is a big concern. Look, this CBDC is built on information system, okay? And hence, everybody's data is there, and privacy is huge concern. It can be tracked. There is a possibility to stop usage of money. So big question mark on freedom. But that's the major goal that CBDCs across the globe are working towards, right? They're trying to prevent, they're trying to look at a framework that can help with fraud, can help look at various mechanisms around security. So CBDCs have a huge responsibility with the fraud, security, and data privacy.
Rupert, we'll come to you next.
If we can expand on that bit, if you think about what a CBDC is, it's a core central ledger which is maintained probably by a central bank. There's some talks of some central banks looking to involve third parties who also participate in maintaining the ledger. But whenever you have a few individuals who are looking after a very large database, there is the risk that they access the database for nefarious means. I think Pradeep alluded to it, but there are lots of technologies available now which can help mask data. Zero-knowledge proofs are probably going to be implemented very closely with CBDCs to reduce the risk of our data being used by bad actors, but it's certainly a risk. I would say, however, even if you compare it to cryptocurrency, because there'll only be a certain or select few parties who are maintaining the core ledger and who have access to it, arguably our data will be more safe than currently what is the case with cryptocurrencies, where it's maintained on a decentralized ledger, so anyone can technically access the blockchain and all the information on it. Cryptocurrency does have an additional blocker to people basically gleaning all the data from it, and that's the pseudonymity of of it. Obviously, if I have a wallet, it's not in my name necessarily, which does provide an extra degree of protection. So it'll be interesting to see whether CBDCs follow that approach or potentially go through an account-based system like we do with the current banking one.
Yeah, maybe just one sentence to add on that. Agree, of course, with everything that's been said. I think that, since the financial service industry has moved towards being much more digitized, of course, fraud and security concern are rising, which is basically part of the reason why blockchain and cryptography technology in general came into the world, right? To try and create a database which will be more secure. However, still the greatest challenges are indeed in the operational aspect. And indeed, as mentioned, with the collaboration required specifically for CBDC between a public-private partnership, because in the end, central bank will not be able to do this whole operational process business flow on their own. So that is an A. And as always with blockchain and DLT-based application, I think that the main challenges lies within the oracle, if you will, within the bridges between different blockchain systems and between blockchain and the real world systems, if you will. And of course, whenever you're introducing a new system to an existing operational framework, specifically again for the financial service industry, it always comes with a lot of challenges. So now replacing a system which is anyhow an extremely challenging one with a more cutting-edge, innovative one, which has a few design choices, a few models, like we've mentioned, retail-based, all kinds of different authentication models that are required, different types of partnership that are required. I think that from an operational perspective, there will be some challenges that will need to be addressed, but I'm sure that they will.
Well, if I move on, if I can, because we've got quite a lot of ground to cover. If central banks can control what we send CBDCs on, do we think that's going to limit its appeal or maybe restrict its adoption going forward?
Well, I will go back a little bit to the last point that was made, the very interesting point that the ledger is not only the concern in terms of security and data privacy. The concern is outside, which is outside the realm of CBDCs. The bridges, the Web 2 to Web 3 bridges are the places where data privacy security concerns are mainly out there. Some enterprises, private enterprises are doing a lot of work in terms of identity, in terms of creating secure mechanism to exchange data. That is the bigger concern for CBDCs. The more we go beyond the realm of the ledger, there is more vulnerability, and especially the data privacy. Now, I'll answer your question about restriction. Well, yes and no. And I would answer the no part. Anything in this space, we have a long way to go. In any small use case is a win for us. So the biggest problem that we have been talking on the panel about is the cross-border money movement. Even if that is solved, it's a big win for me. It's a big use case that solves exchange of goods and services across border smarter, faster, and cheaper.
So I think in terms of just building on what Pradeep said, in terms of what central bank digital currencies will be used to do, I think most central banks will be very cautious on actually trying to control how we spend the money. And the Bank of England, for example, isn't planning to build programmability into the core ledger at this stage, so they won't be looking to control what we spend our money on as individuals. So I think there is a slight misconception that governments will look to use this to abuse their position of power. However, of course, when you look at the wider world and you have governments who potentially keep a closer eye on some of their citizens, of course, this power could be used to abuse it. I think as a central bank, their incentive is to get as many people using CBDCs as possible. So if they look to limit the use of CBDCs, they'll limit the utility of them, and it will probably counteract the project and the overall goal, which is to provide a new financial tool which will hopefully aid the monetary policy and add stability to the economy.
I think it's a great question, right? First, I think it really depends on the government, right, which is adopting the CBDC and the different monetary policy goals of the governments. I think that overall, the goal indeed is to decline the use of cash, to basically also decline the use of shadow economy, both inside the crypto world and outside of it. And in general, I think that from central bank perspective, the goal is an extremely positive one to make everything much more, again, governed, standardized, and transparent. Of course, the issue of transparency still remains a big, I think, challenge of how much transparency does the central bank actually has over the spending and the transactions that are being conducted by the consumer, by the different institutions, by the different businesses. And these are questions that needs to be addressed. But from the other side, I think that even from a philosophical point of view, if you will, thinking about the first, Bitcoin blockchain protocol, who came as an anarchist solution, right, to break the centralization of the financial service industry and enable a resolution which will be peer-to-peer distributed based, and where we've come to today, where central banks, which are, the leaders, of course, of the authorities of the financial service industry, if you will, are harnessing and adopting this technology. I think it represents an interesting, I would say, shift, if you will, from where we started with the idea and main perspective of the technology and where we currently are in adaptation. But I will add to that together with the great vision of the Bitcoin blockchain, of course, in the end, there aren't really two separate financial ecosystems. So that bridge between taking the responsible adult like the central bank, like the monetary authorities that are embracing it, standardizing it, and using it, I think this is and always have been a stage which is extremely essential to really lead to adaptation of different types of DLT and digital finance-based technologies.
I am keen to get onto some questions that we're getting in from the audience, so I'll just drop in a couple of those if I can. First one here is from Michael, and this is actually quite a big question. Could DeFi become systemically important to financial markets in the future?
Wow, excellent question. I'll try and answer that question. So in my mind, DeFi is already a tool in the financial system majorly for few things: small loans, remittances, inclusion, right? I mean, there is World Bank says 1.4 billion unbanked people. So it is already a tool in the financial system for inclusion, for access to financial services. And some of the use cases, small loans are a good example of existence of DeFi as a tool in the financial world.
I'll pass that to the rest of the panel. Do we see it becoming systemically that important?
I think, I'm not sure if systemically as important, but I do think that DeFi in general, what is DeFi, right? Decentralized finance, the ability to create new asset classes, the ability to tokenize existing assets or assets that up until today were not be able to trade with or to tokenize or to work with on a capital market basis. So from that perspective, I think the DeFi offers indeed the next generation, the next evolution, if you will, of financial service and capital markets because of that advantages I've just mentioned that it brings. Together with that, I think that, of course, it requires to have a very, very solid structure and standardization, and also, of course, a lot of regulation around it to enable it to actually reach basically the circulation and becoming at least as dominant or at least as part of the existing system. But I think that the creativity, the diversity, and even the power to the people, if you will, that DeFi and tokenization of different assets bring is amazing, right? To be able to fragment asset, to be able to different individuals that up until today were not able to be part or to trade or to be asset holders. What this technology enables them to do now, I think, is really groundbreaking from one. And from the other, as the DeFi ecosystem grows, we can basically use that as collateral for more traditional financial services and product. So I think that in the end of the day, it will convert to that. Again, I think that there's a long way still, but ideally, the two will integrate to one another.
Rupert?
Yeah, Yeah, I think DeFi will become systemic. I think doesn't mean that we're not going to have large centralized entities in the financial world, but they will be using DeFi. What DeFi does is it removes the need to trust an individual, so we'll have a lot less reliance on brands, and I think we'll get a lot more granular around the details of the actual deal that we're doing, which hopefully means that we'll all get cheaper goods and there'll be less fat in the financial products that we're able to obtain, which ultimately will be good for productivity and just help us make better decisions, which are more objective and reflect the terms that we're getting, rather than just necessarily being restricted to a few brands, which inevitably drives down competition and means that we're getting a worse deal.
We are into our last 5 minutes on this panel, so I'll just finish with this question if I can. How do you see CBDCs and DeFi interacting in the future?
So I think the two will coexist. I don't think that we'll see one or the other. The interoperability between CBDCs and the wider crypto ecosystem is a key consideration for all central banks when developing their CBDCs. If the banks themselves don't create bridges, if you will, into the digital asset ecosystem, private enterprises will. So I think CBDCs will be integrated into the digital asset ecosystem. That might be through stablecoin-like products, or even the stablecoin providers that we have today. For example, you might have Circle utilizing CBDCs, setting up an institutional account, and then reducing their reliance on third parties. For example, like SVB, which obviously went under, and Circle had a lot of reserves with, which is publicly known. So clearly, there's that avenue. But I think, yeah, it's going to be another tool to everyone's toolbox, which will be used in conjunction with others.
So I'll extend a little bit more on what Rupert said. Excitement and experimentation around CBDCs means there is coexistence for both. DeFi is not just only a financial tool; it is backed by a technology that offers more. So I feel, for a universal money, both will coexist, both have things to offer to each other. The technology behind is the core value that it brings to CBDCs, to DeFi, to create a financial ecosystem where we could do movement of money faster, cheaper, remove the fat fee from the financial system. Some of these benefits are mutually exclusive to each other. Both will exist in a financial system where there is a universal money.
Thank you, Pradeep. Odelia, I'll give you the final word on this.
Thank you. I think the two will live together, like we said. I think that CBDCs have a very crucial part in standardizing it and paving the way towards it. And I think that one aspect that we haven't mentioned here today is everything vis-a-vis the digital identities, which are extremely important for everything as the access point to DeFi and to Web3 applications. And I think that here, again, CBDC, because they are issued by central banks, can play a very vital role in securing that and really make sure that every individual has its own decentralized digital identity, and from that you can move forward. I think that the key challenges with DeFi is less around the product and the services and more around who stands behind it, right? Because they all offer a great deal of services. Sorry, like Rupert mentioned, zero cost, or at least lower cost, or collateral, or yields, or earnings, or things that can sound very promising. But in the end, as we always say, many of them are DAOs, many of them are organizations that we don't even know who stands behind them, or how we say, who do you actually pick up the phone to when something goes wrong? So I think that CBDC can play a very vital role, like I've mentioned, in at least paving some ground and some standardization, some security, some assurance. I think that every time when we introduce the new technology, and I've been dealing with blockchain for the last 10 years, we've been saying it in 2016, and I think that now more than ever, Some of the key challenges in adopting a technology as disruptive as this is within the social understanding and the security and the confidence that the public feels around those things, and not just the extremely tech crypto savvy individuals such as ourselves, but also the household and the people that are not living the technology on an everyday basis. And I think that in order to really get there, CBDC can potentially play a very essential role in that journey.
Absolutely. Thank you all so much for your time. I think we've really got under the skin of that today. We could talk for another half an hour, I'm sure, but we must move on to our next keynote. Thank you so much for joining us here at Fintech Live, New York.
Thank you. It's a pleasure.
Thank you.